Let's now have a look at the Australian dollar and see how we're heading into this morning's session, just sitting above that 72.80 mark. Let's now get a reading of the broader economic outlook. Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on. Look, how are you looking at this market at the moment? It's pretty mixed. You know, we can't seem to find a direction.
Yeah, it's mixed, and the share market first, I guess, US share market, Australian share market, it's mixed and it's highly volatile. It runs quickly in one direction and then the other. Overall, though, stock prices are lower, and the US market's only managed to retrace about half of its losses of previous weeks, and then it started to fall back again. Its performance in the US market last night, New York trading, was very troublesome. I think that would have been of concern to a lot of the bulls out there and the longs, that it didn't just kick on as expected. So we're going to get some sort of downward pressure period here for a while, and there's still a risk there, the chart in front of you, of this being some kind of very major lasting and sustained long-term top. And I know that's something people don't like to hear, but it's better to be forewarned than for it to catch you by surprise. So I'd just be, again, saying to people the best way forward is active management. And when we look at the Australian market, it's a similar story, but it hasn't even retraced as much as the US market. And again, it also is folding over a little bit on itself. And of course, there's a lot of economic drivers behind both the US market and the Australian market at the moment. In the US, they have that debate about the debt ceiling. They always have a debate. And often these debates don't just sort of get resolved at the final line, at the end of the race. They actually extend the race again. So I think it's going to be a troubled period on that basis. We are seeing the Fed talking about the fact that it will need to raise rates perhaps earlier than it thought. Remember, at ACY, I've always forecast that they didn't know it yet, but they'd be hiking sooner than they expect, and they're certainly shifting in that direction. And around the world, I think something people are sort of overlooking is this constant electricity seems to be the most precious commodity moving forward. And we're seeing high electricity prices in Europe, was just reported, starting to weigh on steel production. We're seeing significant interruption and disruption in China based on supply chains. We saw Texas have outages. So moving forward, we could see that electricity becomes ever greater in demand, and therefore more difficult to supply perhaps than people thought, and that will cause disruption, not quite as much as Delta, but it will be another disrupting influence. Overall, US economy is definitely cooling. Chinese economy is in more trouble than I thought it would be. I thought it was settling back to normal, but it seems to be dipping below pre-COVID normal at the moment. So that is of concern. You have the Evergrande issue, but that's also part of a broader economic slowing in China, which will reduce demand for our exports just when we don't have the best relationship with China, just as Brazil is coming back online, and just as iron ore prices have fallen 60%. So it's hardly a positive outlook there on the fundamentals for the mining sector, though they've already been priced a lot lower. So that will become a price action consideration. But I think the fundamentals for Australia are still very troublesome. What we're seeing with the reopening roadmap is that that's probably already priced into equities, and in fact, a probably overinflated economic recovery is priced into our current stock market. I think it is going to be a troubled and hesitant opening up. And remember, when New South Wales leading the way, I guess, out of Victoria, when they open up on October 11th, it's only a little over 2/3 of the population that can go back to normal at that stage. So, it's not going to be this full-blown economic surge that people are expecting. Economic data will have a bounce, but it won't be sustained.
Clifford, what are your expectations when it comes to the Australian dollar? I mean, we've gone through the commodities backdrop. Further weakness, do you think?
It's sitting precariously, but looks almost like it's almost like an eagle's nest perched on the edge of a cliff here. It's starting to look a little bit comfortable and secure, but still it's on the edge of this precipitous drop to 70, perhaps 68 cents. So that is the risk scenario you have to consider. And the US dollar is stubbornly firm at the moment, and with the Australian dollar having tried to price a reopening, yet being hit by the headwinds of various slowing economic environment. I mean, the world's two biggest economies are slowing, the US and China. So, that isn't a good environment for an exporting nation. And on the domestic front, I've been forecasting a recession from many months ago. There's still risk of a recession. It's still possible Q4 will be a negative GDP number. So that's something to bear in mind. Reopening doesn't mean we're back to a boom economy. And the Australian dollar is trying to price all of these factors in all at once, as well as what the US dollar is doing. So it's kind of stabilized for the moment. But I would highlight until we get back above, sort of another 1 or 2 cents higher, it's a consolidation period that you'd have to consider still has downside risk.
Clifford, what's the trade here though? Is it against the US dollar or is it in some of the cross rates?
Well, I think it is against the US dollar. I think also, as I've said on your show before, Cara, sterling Aussie is a really interesting trade, but it's looking a little bit like the Aussie dollar US dollar chart at the moment. So there's a bit of correlations going on there. It's sort of sitting a little bit on the edge of a cliff. I have a thing, my feeling is the Australian dollar will let go to the downside against the US and against sterling. So sterling Aussie will rally as Aussie US falls. And we have some very, sort of clear levels, those trendline levels there to keep an eye on. But sterling has still getting that overall rebound strength, if you like, of their reopening, though they are encountering rather difficult economic management issues and supply issues within the UK purely through contact tracing and specific isolation quarantine periods. And that could be something that Australia, New South Wales and Victoria should pay attention to as a risk to our economy going forward as well. But sterling Aussie I've liked for a while. Whether it dips below that support or not, I think it could still be a good long-term buy.
Clifford, what about the euro? How are we looking?
Euro, I think I've mentioned to you, Cara, euro looks like a lead weight. It's just so heavy, looking lead-like. And I think it's been sold off over the concern of the change of government in Germany and the coalition forces at play there, and obviously a less settled political environment moving forward. But then everyone thought, okay, that's been priced in by the dip on the election. And there was a fair bit of that going on yesterday, but it hasn't really worked out. The euro is again heavy against the US dollar. I do think, a good half of the story, of course, is that the US dollar is stubbornly firm. And that's because there's still safe haven flow to the US from some countries experiencing very traumatic Delta periods. But it's also very much large tech, large corporations of all kinds being a little concerned about what's going on really and just feeling uncertain about the world all of a sudden again, afresh. And out of that uncertainty, they're bringing money back to the US. That's supporting the US dollar at the same time as Europe has a little bit of political juggling going on.
Clifford, great to chat. Thanks so much for joining us this morning from ACY.